The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 4th terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and most importantly, I'm here to serve you. So feel free to pick up that phone, dial on in 877-927-6648. If you can't dial in, let those fingers do the walking. You can always send me an email, steve@tfnn.com, and inside the subject heading, please put radio show question. Of course, in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trading down nearly 300 points, 288 to be exact. It's trading out at 26,540. That's a little over 1%. The S&P over 1% as well to the downside, 32 points, trading at 28.93. NASDAQ 100 off 2% or slightly more, 162 points, 74.74 is its print. The Russell 2000 down 1.5%. That's off 24 points, trading at 1646. Semis are down over 2%, 2.25. That's 30 points. So it is mean and red across the board out here. Spot volatility index is up 31% as we speak right now. Long-time listeners, maybe even shorter-time listeners, know what to anticipate overnight if this is how the spot volatility index closes. Not the 31%, but anything great of 10%. Yes. And what that means, we'll come back, we'll take a look at, is you should anticipate, you should expect a bounce or bottom in the marketplace. We'll go take a look at the reasons why. You've got gold trading off $1, silver down 7 pennies, light sweet crude off $1.69. Leading the charge to the upside, dollar-wise, it is Constellation Brands, STZ up $10. Chipotle is up 7. You've got Market Taxes Holdings. That's up about $7. To the downside, Amazon, $45 to the downside. That's a little over 2%. Google's down 40. That's 3%. Booking Holdings down 21. Mercado Libre off 20. So let's first begin by taking a look at the markets. I see there are a couple of email requests that have come in. But let's first take a look at, maybe this answers some of the questions, maybe not. Let's first take a look at the equity futures contracts, because the question should be, hey, where is support? So if we take a look at the 4 equity futures contracts, the ES, the NQ, the Dow, YM, and the Russell 2000, and that's going left to right out here. Let's start with the ES mini. So here's what we know right now. As of 1:09 in the afternoon, there's really 2 levels of support. The first level is the bottom of its daily profile. That number is 28.94. It's really 28.93 and change. Our low so far today is 28.93 and change. So the ES mini has hit support. It's hit support. Does that mean that that's the bottom for the day? It's very possible. What we don't have going on any of the time frames, certainly if I take a look at our Rhodes momentum indicator signals on the short-term time frame, we don't have any bottom signals in a 30-minute, hour, 2-hour, 5-hour. Those are the time frames that I go ahead and keep track of. So that's one thing that says, okay, maybe, maybe not. Maybe there's another push lower, maybe a bounce here. So it's bounce or bottom at this stage, possibly another push lower. And if there's another push lower, actually price could move all the way down to a brand new weekly profile that actually formed overnight. And that level is 28.77. So at this stage of the game, as we speak at 110, what we have is a retracement back to support on a daily time frame for the ES Mini. Eventual support, 28.77. If we take a look at, let's kind of keep going here, and then we'll come back to the equity futures contracts. We can take a look at shorter term duration time frames. So what we know right now is the ES is up against potential support. In the case of the NQ, we don't have that same set of data out here to in essence, to support that, to support. Boy, that's crazy. What we do have at this stage here is still a higher low than the previous trading session that made a low, which would have been on September 24th. Now, as we take a look at its profile, price is trading near the center of the box, which is 75.11. We're trading at 74.90. So we've traded down below that level. The bottom of its daily profile is at 74.50. But I kind of discount the daily profile at this stage here because you'll see here, let me do this. This will probably make it easier for you to take a look at as soon as my system gives me the opportunity to do that. Why aren't you participating here? What I was going to try to do for you is just simply here. I'm going to do it now. Don't know why it's slow. That's never a good thing when we're doing the radio show. So pay attention to the chart out here as I go ahead and I turn off the daily boxes, the daily profiles. Those are blue. So if you and I were to really take a look at this chart out here, this is a daily, by the way, daily time frame chart that you and I are looking at for the NQ. And what we can see is the better levels of support or resistance. One, you'll notice that this weekly profile is bullish in structure. Bullish in structure because the center line at 75.11, much closer to the bottom of the box at 74.05 than it is to the top. So if you're going to ask me where's the real support level inside the NQ, we have to say it's in that 74.05 level. But if it trades back above because of support inside the ES Mini, back above 75.11, this is also an area where both buyers and sellers are comfortable with price from the daily, well, really from a weekly standpoint inside of the NQ. I'll go ahead and turn those daily profiles back on just for the heck of it, so I don't forget to do that later. Now let's go take a look at the Dow Equity Futures contract. In the case of the Dow Equity Futures contract, a brand new profile that formed today. Let's do the same thing, only let me go ahead and turn the weekly profiles off. So if we take a look at where the retracement has taken us to today, you're going to see the blue line out here. Let me move the data box over here. And the bottom of that box is at 26,408. We are trading right now at 26,537. The actual low, 26,510. Oh, I take that back. That is the center line out there. You know, it's almost hard to see. So in this case here, what we can see is the bottom, and this is a bullish structured box. Let's go ahead and turn off price. So if you're going to ask where's the ultimate support at this stage here for the Dow Equity Futures contract, you'll see it's at that bottom of the box, a bullish structured box out here. So price is at its center. On a daily basis, we're looking at a daily chart where both buyers and sellers are most comfortable. They believe that there is fair value at this 26,532 level. So 26,408 would be ultimate support inside of the Dow Equity Futures contract. If we go ahead and we turn those weekly profiles back on, let's take a quick peek. You'll see that the center line of the weekly profile, 26,367, that's the point of control, a bullish structured weekly box as well. The Dow, on any further push lower, today, tomorrow, the next day, should find support at 26,367. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So let's finish this off by taking a look at the Russell 2000 daily. And if we take a look at the Russell 2000, the actual cash indice had completed a seventh wave move yesterday. The futures contract did not. By moving lower today, we are in wave number 7. Now, oftentimes in wave number 7, it can extend tomorrow and the next day until it doesn't make a lower low. But we are in wave number 7 out there. So that's something to pay attention to. If we take a look at just the market profiles out here, the daily market profiles are useless to us inside of the Russell 2000 at the moment. They had formed, and I don't see this too often, but they had formed a new daily box earlier this morning, but that has vanished with regard, it has vanished today, and so we don't have that as a level of support to look at. What we do with regard to the market profile level is the 1627.40 level. So you're trading at 1649 right now. Let's take a look at the market overall. Let's take a look at the New York Stock Exchange. And the one tool, one indicator that you and I want to take a look at is the advanced decline oscillator reading. What you'll see if you're watching this on TigerTV, that is panel number 2 on my screen out here, you'll see that we're at a minus 182 reading. Now, if you take a look at just simply the white dashed lines, a extraordinarily oversold area would be minus 250. We're not there just yet, but once the advanced decline oscillator reading gets below, this white dash line is around 150. In fact, I should make sure that it is at 150. We've got the plus 150. We've got the, there we go, minus 150 level out there. So you'll see up at the top, you'll see it's you've got a red line. And that red line is I don't have the price on there, but that's the, that is the, no, I'm sorry, this yellow line is the plus 150 level. This, and at plus 150, if we go back and we take a look at when does the New York Stock Exchange typically make some type of short-term top, it's when price gets, or when the advanced decline oscillator reading gets to the plus 150. The same thing is true at the minus 150 level. Now, we're below it today. So what this is telling you in just simply one day, that this thing has gotten down, because that advanced decline oscillator reading has been below zero since September. So at this stage here, what we're taking a look at is this thing is down into the oversold reading. Now, why is that important? It's important for the following reason. When we go ahead and we take a look at this chart. Now, this is a chart of the S&P 500. And what is at the bottom is the one-day rate of change for the spot volatility index. You can see right now the reading is 33.76. That means we're up 33%, more than 33% over the closing price of yesterday. Now, how I reflect anything greater than 10, which is what we're looking at with regard to these blue arrows, I want you to pay attention. The last time that we had a reading above 10%, September 17th. And I guarantee you on that day, going into the close, everybody just simply thought, hey, the market is going to heck in a handbasket. Well, what happened on the very next day? Actually turned out to be a bottom. Let's take a look at the prior time, August 30th. You've got a rate of change of plus 10.5%. What did you have on the next day? A stalling, a bounce or bottom. You had that bounce. Take a look at the trading session of August 15th. A one-day rate of change greater than 10. Well, it was right at about 10%. What did you have take place next day? Well, that turned out to be a bottom. Go back prior to that. A one-day rate of change of 12% on the trading session of August 13th. What did you have take place the next day? You had a bounce. So you kind of get the gist. If you go back and you do all the homework, you're going to see that within 24 hours, you have a bounce or bottom. So speaking about the S&P 500, let's go to John in Philly. John, thanks for calling. Thanks for holding. How are you today?
Hey, Steve. Well, I'm excellent, and always helpful to see all the details you're able to bring to bear. Steve, I wanted to ask you about both the S&P 500 and the Russell, and I'll first set background and then give you a very specific question, if you could field
Sure.
and just share your thoughts. Share your thoughts with me and your listeners. I'd appreciate it.
Yep.
First, the Russell 2000, when it rallied up and made a high back late August up at 1742, this is the Russell 2000 cash.
Yeah.
I had observed, and I shared with you and others, a pattern that I don't see often and is reasonably reliable. And when it is on, the signal, and no signal, no tool is ever 100% accurate.
Sure.
But when this particular pattern signal is in fact accurate, it is deadly precise. And in the case of the Russell 2000, back late August at 1742, that post-triangle thrust pattern tool said high right there, and then fall down to the August lows, and then all the way back to the May lows. Well, the Russell has been declining, as you aptly just described, for a couple of weeks, and we're
Sure.
back to the August lows. So we're headed in the direction of the signal that tool gave me. Now, the S&P pattern was different, and it rallied into its high September 21st and then matched that high just, I guess it was yesterday. But into that September 21st high, I also have the identical pattern signal coming into play. And the patterns in the S&P and the Russell are a little bit different, but the pattern, the post-triangle thrust pattern signal for the S&P, or as applied to the S&P pattern, says top September 21st with a reversal and then a decline back to the early May lows, which is down at 25.94 or thereabouts. So that is what that pattern signal, or that pattern tool signal, is telling me.
Okay.
And of course, only time will tell if that's accurate. I wanted to ask you, what is it that you're seeing that says that just ain't going to happen? If you could share any thoughts on that question, I'd appreciate it.
I think, John, that there's no question that first, the New York Stock Exchange has been giving us some topping patterns. The S&P did the same thing. Well, here's the Russell 2000. So my signals that helped to identify tops and bottoms the Rhodes Momentum Indicator, was certainly enforced inside the Russell 2000. So we can see that out there. And that was a confirmation that really took place between September 4th, September 5th. The real confirmation, though, took place on the trading session of September 6th and 7th when price got below the bottom of its daily box out there. And then that continued to act as resistance. In the case of the S&P 500, what we're going to see out here, as soon as I can punch that up on the screen, we're going to see that I believe it was September 24th where we had that same pattern out here. September 24th when the market gapped to the downside. But at the same time out here, when I was taking a look at the S&P 500, in order to be able to identify good levels of support or resistance, I was relying upon the TAS profiles out here, just simply because they work so well. Now, right now, I only have the weekly displayed. Actually, we have the daily displayed. So today looks like, now what prices come down to support. So we have to take this one step at a time. In order for your outcome to come to fruition, what I would need to see is a close below 28.77. I see we're going into a break. So, John, why don't you hang on? We'll take a look at, again, these levels and go from there, all right?
Thank you very much.
Okay, Steve Rhodes with TFNN. I'm with John in Philly. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your all these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Monday, September 24th, TFNN is launching a new updated version of our website. You can still visit us at the same TFNN.com URL, and starting Monday, you'll be able to experience the new and improved TFNN website. If you're a current subscriber, don't worry, your subscription will be automatically transferred. The new TFNN.com will allow much easier access to all your account and subscription information. Get ready for the new TFNN.com, educating investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We're on the line with John from Philly. We're taking a look at the S&P 500, although the chart that I've got up on my screen is the ES Mini. And the reason why I want to take a look at this, and John, the one thing that I wanted to point out to you, so you're asking a very good question, but the way that I can answer that question is say, just let's take this one step at a time, one moment at a time, one set of support levels at a time. And if we take a look at the bottom that was formed, excuse me, sorry about that. If we take a look at the, yeah, thank you. If we take a look at, I always need blessings, so thank you. So if we take a look at the bottom that formed in June 28th out here, let me just kind of put an arrow so everybody knows exactly where it is that we're talking about. Right here, what we're going to see is that the ES Mini came, it's a red line, not exactly an arrow, but we can see that the ES Mini came right down to a level of support. Here we go. We've got the arrow working. So right here on this day, that's one thing we know. We also know the structure of this box was a bullish structured box. What we mean by that is the center line was much closer to the bottom than to the top. So that should have acted as support. And it really did act as support. It was resistance for a while, but price really cleared resistance back on the trading day of August 2nd. Price bounced around that level and cleared it back on August 2nd. And then yesterday, it really wasn't yesterday, it was early this morning, a brand new profile formed with 2947 being the top of that box. Now that's the equivalent of the September 21st high out here inside the ES Money. Inside the ES Mini. We still have a the new box it formed is also a bullish structured box. So the level of support that we need to be watching in order to be able to answer that question would be 2877. So if the ES Mini closes below that, there's nothing more bearish than a failed bullish pattern. And with regard to the way that these profiles work, that's what we would be looking at. So I can't really say that your outcome will occur or not. I am in the camp that that is significant support, and that's where you would want to be buying the market, the ES Mini. Now, what we'd also want to do at the same time out there is take a look at what's going on inside the global flow of cash inside the S&P 500. And if we take a look at it, I just have to find it. It's right here. If we take a look at it, we're not really seeing anything significant in terms of euros, yen, or pounds just yet. Nothing really broken so far. Now, I've put profiles on these charts as well. And I've just started doing that. So I'm just tinkering with that to see how well the C-Signal platform interprets that conversion and how well those profiles act. But yesterday we were at new all-time highs inside all three of those indices, or inside all three of those currencies. We didn't make a new high inside the ES Mini. That's not how tops are formed inside the market out here. So I'm still looking at this big pullback. But I'm still looking at this as nothing more than a retracement to support when I take a look at the ES Mini. And then, as you and I, as I was speaking before I went to your call out there, the one thing I really want traders to focus on is that pay attention to the likelihood of a bounce. I know that traders towards the end of the day are going to say, okay, this is bad. I want to get on this action and short it. It's absolutely the wrong time to do that, just simply by taking a look at the one-day rate of change, which right now is 34%, 34.8% inside of the spot volatility index. So tomorrow should at least be a pause, a bounce, or a bottom. We never know which one it is, but that's just simply the high probability based upon other occurrences of this. So, and when I take a look at, John, the New York Stock Exchange, back below now, minus 185 on its advanced decline oscillator reading. A lot of bottoms have formed in that area as well. So that's my take.
Excellent, Steve. I always can count on you to give all the relevant things to look at. So mission accomplished. I appreciate that. And just for your benefit and those watching Tiger TV, I put in the Tiger's Den that pattern tool that gave me the signal on September 21st, just for what it's worth.
Great.
And of course, it might not be worth much, but there you are.
Okay. Thanks, John. Good to speak to you.
Thanks, Steve.
All righty. Kay asked a question here. So let's go to the questions that have come by email. Kay says, let's see, where do you see support for the NQ on a 30-minute chart? On a 30-minute time frame chart, let's go take a look at that intraday set of profiles really for K out here. And K, I don't believe that there is a... Here's your intraday time frames, and on a 30-minute time frame, there's really no new box that is formed. In here you're looking at a 15 to 30, a 60, a 90, and a 120-minute time frame chart. So as far as where there's support on a 30-minute time frame, I don't see it just yet. And so there, what you've got to do is really come back and defer to the daily time frame. And as we take a look at the daily time frame, that's at a price level about 74.50. But because of this, just simply because, and that, by the way, it should be strong support. And when I say should be strong support, you don't see a center line there. You don't, but the center line actually exists. It just happens to be at the same price level as the bottom of the box. So you have the center line at 74.50.80, the bottom at 74.50.80. You're trading at 74.81. That should be your support level that you're looking for in the NQ. If price moves below that, then what you have to do is revert to the weekly time frame, the larger time frame, and that support level is going to be 74.05. So I hope that that helps you out with regard to what you were looking for. We've got Hector. Hector wants to take a look at NBEV. So let's go take a look at NBEV. Let's look at it on its 3 different time frames out here. And NBEV, by the way, is New Age Beverages. Now, I don't know what they do, and Hector's question is, can you give us your thoughts on these? Okay, and you want to take a look at the Boeing. So, boy, this is a tough one. I don't know. Is this a cannabis related? Maybe somebody in the den knows. I mean, this thing took off really big on the trading week of September 17th. The trading day, in essence, was September 18th out here. Right now, what I can say is, Hector, this thing is trading right at about the top of its box support out here, right around the 830 area, and you're trading at 822 right now. If this is going to pull back, you're looking for a price level of about the 572 to 491 is what I would surmise. And take a look. Excuse me, something in my throat. Yeah, okay, thank you, Kelly. So this is a cannabis-related stock. And if you're looking to get into this, what I would do is I would just simply wait for a pullback out there. If I take a look at NBEV, if I take a look at my daily chart out here, what we can do is, excuse me, we can take, and there's a pretty decent odd or chance that this could pull back. We can see the price has been moving higher, doing less relative energy out there. And another possible buy area would be Stevie's green line. That's around 649 out there. So if this is an equity you're looking to get into, Hector, I would say look at that. You want to look at another equity? We'll do that when we get back from the break, really, 2 of them, ESV and Boeing. So ESV and Boeing is what we'll look at when we get back from this break.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The Taz Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the Taz Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the Taz Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the Taz Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Folks, geez, we lost one of our air conditioning units this morning, and happens to be the one for my office. And it is like 85 degrees in here. It is hot. Okay, let's go take a look at Boeing out here for Hector. And Hector, I don't know what you wanted, what information you wanted for Boeing, but here's what we know. Pulling back just a tad today, if we're looking for levels of support, what we can see is that from a daily, weekly, and a monthly time frame, prices trading above support, those being the tops of their daily profiles. So from a daily standpoint, you're looking at possibly a pullback, let's say to 372.56, 369.76 is the top of the weekly box, and we'll ignore the monthly profile down at the 287 level. But before Boeing does that, if we just simply take a look at the daily time frame out here, we're going to see that the rising oscillator unchanged line is at 378.29. So that would be a level. I don't see any other pattern out here inside of Boeing to suggest that it's anything more significant than just your garden variety retracement out here. So 378.30 would be the number that I would be looking at inside of Boeing. The other issue that you wanted to take a look at is ESV. Now, ESV is ENSCO PLC. In this case here, and again, you're just looking for the view, this is, you're obviously doing some bottom fishing here. But this equity, if we just take a look at the monthly time frame, it's trading above resistance, which was 708. So this has some potentiality. Can we say that? ESV, let's put it on our daily time frame chart out here, see if there was any bottom formation. Is this the right equity? Yeah, okay, so I'm just going all the way back. And yeah, sure enough, it is. So if you take a look at the trading session here of March 2nd when it formed a hammer candle, we had that Rhodes momentum indicator bottom. So that was back quite a while ago. So now let's take a look at what this is doing in the here and now. First, we can see that price is trading, as we speak right now, below Stevie's green line. It was failed to get over resistance, which was 858. My red line, green line's at 834. So this would suggest that this is going to go ahead and pull back to either 792 or 726. That's the center of the box, and that is the bottom of the box as well. So that's about what I can see when we take a look at ESV. Thanks so much for writing in. Leonard Leo wants to take a look at a couple of gold equities. So let's go do that for him. GFI, Goldfields is one of those charts. I thought I typed it in, GFI. And let's take a look at it. So, Leo, when we take a look at trying to identify levels of support or resistance, we can see that this is trading both within a daily and a weekly profile out here. So support on this would be between 231 and 236. That's either the bottom of the box on the daily or the weekly. And resistance in this stage here is going to be in the 253 level. Now, it's trading up just a tad as we speak. If we take a look at Stevie's other charts out here, 231 becomes a level of support. We can see that Goldfields, just like we looked at that ESV issue, formed one of those Rhodes momentum indicator bottoms. Now, in the case of Goldfields, it did this on September the 12th. So it's got some resistance from the on top of those profile levels. You'd really be watching the high from September 26th, a little shooting star candle. You also wanted to take a look at, let me see if it's up here, if I lost that. There we go. It is NGD. I believe that is New Gold NGD. Looking for information on that. In this case here, we would say that Goldfields looks better than New Gold. The reason we would say that is because, look, price is below both a daily and a weekly profile as well as the monthly. But let's take a look and see if this formed a bottom signal, NGD, out here. And it did, and it did. It most certainly did, but not of not a real significant one. New Gold, the only thing that New Gold has going for itself is the following, and that is this little sign of strength. So prices come back to the sign of strength. Let's put a yellow line right where the bottom of that is. So here's your yellow horizontal line out here, and I'm going to really say the sign of strength has got to be, you got to put your level of support right at the September 11th low, which is at 76 cents. But I'm going to use as the volume perspective 13 million shares off of the bottom, so it looked pretty nice. Prices come back with light volume. It was tested on September 27 with 2.7 million shares. Even the day before that sign of strength had 4.4 million shares. So New Gold has tested and rejected a key swing point on light volume, and it's pulled back with light volume out there. What we don't like about this is it still is below a support level, meaning that 91 cents is really resistance. So if you're going to ask me which of the two charts do I like better, it would have to be that GFI, Goldfields International. So best of luck with that. No other, okay, so you're welcome, Kay. So no other questions out here. So what do we want to go look at next? What is it that I can provide you that would be meaningful information? Let's go take a look at Treasury bonds. So what are T-bonds doing? Let's put up this chart here. Give me one moment to do that. It'll take me just a moment to get down to the symbol. But they have the possibility. So this is going to be odd. Earlier in the day, it looked like they might be trying to, and we won't know till the close of the session, trying to form a hammer candle. So let's go take a quick peek and see if it is, and let's understand where Stevie's red line is at. So here, even if it forms a hammer candle, the problem is, and it hasn't just yet, the problem is it also has a bearish candle. So hammer would be bullish, but this thing is gapped to the downside. So it's got that falling window out here. And if we take a look at what the 30-year rate is doing, let's go over and take a look at that. It's above the 2015 resistance area. Give me a second here. Where is it? Indexes, T-bonds. Is this it? No, it's right next to it. So here, if we take a look at, right now, the 30-year rate is at 3.353. And what we can see, this yellow line, by the way, we're looking at a weekly time frame chart out here. And the resistance level was established back in June 20th, the week of June 22nd, 2015. And that level is, in essence, held as resistance. So we've cleared that. That doesn't mean that price won't come back and test that area. But if it tests it and rejects it, what that says is long-term rates or 30-year rates, would be heading up into the 363 level. So even if there is a hammer candle that would be forming inside of the daily chart for Treasury bonds, it would really, really, really be suspect. You've got price trading below Stevie's red line. That's bearish. If we take a look at the weekly time frame, let's do that. Let's look at the weekly time frame out here for Treasury bonds. Give me just a second for the system to be able to get down there. Let's see what it's doing in that time frame mode. Keep going, keep going. Okay, so now we've got the weekly time frame chart popping up on our screen out here. Let's see what we've got. What do we have? Where are we going up against? You know, the real tough thing for this is that the trading week of, you're going to see a little red dashed line. That was from the low of May 25th. And we're well below that this week, and that too is bearish out here. So it does look like T-bonds want to continue going lower. And yes, the market can go lower with bonds going lower too. Steve Rhodes with TFNN. But great.
Hi, folks. This is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back. So, folks, no questions that are in. Let's go take a look at gold, light sweet crude, a few other things. So, we've got light sweet crude trading back at 2.7%, $2 out here. So, where's it headed to? It's trading right now at about 70.35. And what we know about light sweet crude, we took a look at this a few days ago from one of our listeners, and what we noted was the pattern that took place on that big move up on October 1st, wide price spread day. But what we did was we said, hey, just kind of like the Who, we weren't going to get fooled again necessarily. And the reason was because what we noted was that had formed a Tom DeMark setup 9 count. Now, price on that following day, just really sideways, a tad higher. And then we saw a little move higher yesterday, which says that price really should have been able to accelerate higher. So what we're seeing take place right now, and the level to be watching, and the question is price just pulling back to support? Now, there's 2 levels of support out here. The first level is where it almost traded to this morning, and that is at Stevie's green line at 73.73. The actual low so far has been, sorry about that. Let me see if I can actually grab it. 73.88. So 73.88 versus 73.73. Now what we're doing is we're shaving hairs out there, so to speak. So we've seen light sweet crude pull back to support. The real support level is really between the top of its box at 72.78 to 73.73-ish, because that line is going to simply move up and down as a new pricing information comes in as well. So right now, light sweet crude, it gave us that little topping signal, but yesterday's move above that Tom DeMark setup 9 count is really a momentum type of move. Today is going to be 1, 2, 3, 4. No, it's not. It's not going to continue that. Well, I don't know if it will or it won't. I'm talking to myself. It depends on really today's closeout here. So that's the end of the show. Sorry about that, folks. Hey, I will not be with you tomorrow. Instead, I'll be under the scalpel with a dental thing. So have a great weekend, and I'll see you on Magnificent Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.